Hey guys, if you have been tracking the market closely, you would have heard that Lyndenwoods was sold at a crazy rate today. 94.5% for an average of 2450 PSF. We got quite a lot to cover today, so let's jump straight into the article. 12,000 visitors over the 2 weeks, average price 2450. I think most people would have heard or rather expected that they will be launching at maybe about 25 to 26 PSF. But keep in mind, this project is before harmonization effect. So if you have to factor in, I would say maybe if you add about 8%, that will be easily going towards about 2,700 PSF. But for this case, 2450, if you add that 8%, you'll be probably closer towards 2650 if I add about maybe 200 PSF, because 10% is 2,245, right? So agak around there. So if you compare to those that are already post-harmonization, example Bloomsbury, there is not really a one-to-one. Keep in mind that because even though most of the projects recently launched, they are post-harmonization, but this particular project, because what they did was they converted the business park plot of land to the current residential. How they managed to get it, that one we don't know, but we know the capital land is very influential in the local scene. That's why if it's gonna be done, then it's gonna be there for sure. Then we move forward to the news. Almost all the 2 bedroom, basically I think from what I know, almost all or rather all were cleared already. If you want to buy, also don't have, but based on the previous historical trend of the new launches, it's very likely that they are going to be bounced out units for whatever kind of reasons. So if you are really desperate to camping for this particular project, especially for the sold out unit types, just wait around. I think over the next 1 or 2 weeks, depending on when developer will want to release the units, I'm very sure there will be some that will be bounced out because of people realizing that either they are overpaying or they realize that they haven't really been prepared enough in a way or another to make this purchase and hence drop out. All the 45 3-bedroom units were sold with prices starting from 2.3 million. The remaining were the 3-bedroom plus study layout, starting for almost 2.9 million to the 4-bedroom premium from 3.61 million. The bigger units they were launched together with a VIP queue, which is on Friday. So today we were more of the mad rush for the smaller units up to the compact normal 3-bedder. Okay, and then this I think was a good sign of what is really happening in the market, especially after the SSD period, because a lot of people are feeling that fear, that wait and see approach, which I think a lot of buyers are adopting because they are trying to aim. Is the government trying to crash the market, which obviously, as we spoken in the previous video, or rather in a lot of videos before, the government's priority is never to crash the market. It is to always stabilize the market. And after this particular Lyndenwoods, will the other developers for the subsequent few launches, because as you guys probably know already, there's going to be a lot more launches upcoming for over the next few weeks, will they be a lot more optimistic? Let's just see. But if you are a buyer waiting at the sidelines, then I wouldn't say that it's going to be too particularly optimistic, unless the developer, of course, they are a little bit afraid, they want to be a little bit more sensitive in terms of the pricing. Then it remains to be seen. When they were going to get the market share, of course they threw out the price from 2,100 plus, but from past experience, I probably would already said that it's going to be at least maybe about 200 PSF above this. And true enough, it was like 300, almost 300 PSF. So 200 plus 300, which is almost quite accurate usually on average, and up to, as far as I know, almost about 2,700 plus PSF. Back to this, it is the first residential launch, like what I said, after the SSD thing, which a lot of people apparently are still unfazed by the extended SSD holding period. And as I said, the large majority is still holding beyond 4 years. Maybe is it 4 flat, or is it going to be low flat or low 4 or high 4 onwards? Doesn't really matter. But the key thing is that there are still people who don't mind holding longer, especially for BUC, because the causes of holding is not exactly very high. And this shows that the property sector here in Singapore is underpinned by strong fundamentals and then has a lot of resilience. Why? Because all these global trade tensions and heightened economic headwinds when that happens, will people rather park money in Singapore real estate or park money in other countries' real estate? So I think the answer over here is going to be obvious, and I think that is the reason why people don't mind pulling out money, especially if they feel that the stock market is going to be very unpredictable. Some people are adopting a negative outlook. I'm not a pro in that, so I shall not comment on that. If that's not really my point of my view, I shall stick to real estate. But from what I know, most people in Singapore will prefer to buy a property if they can, or rather they will flush a large majority of their net worth in property if they can, and which contributes to the stability of the real estate market over here. And these recent land bids also reflect developers' confidence in the market, and probably after Lyndenwoods, they will also have increased confidence. I'm gonna go a little bit faster over here because after all, this project is already launched, so I shall not be talking too much, but just very brief ones. This is the all the depictions of the development over here. This is the exact site. A lot of people are recently going towards the January thing, which I think they are doing very good marketing over here. It's quite a nice building, but for those people who are concerned, oh yes, you can walk through it, you can cut through and then go to the MRT. Depending on how fast you walk, I don't want to comment lah. People say you walk very fast, you walk very slow. So of course, if you can be anything between 5 minutes to 10 minutes, if you can walk 2 minutes, this is definitely not walking. You're probably sprinting. So for agents, they are telling you 2 to 3 minutes walk. Please don't walk under the hot sun to 2 to 3 minutes. I think that is definitely not going to be done. They are literally going to be sprinting right in front of you. So don't buy that PS lah. Fact sheet, the site area is about 11,000 square meter, which I think is fine. 300 plus units, which I think is okay also. You don't have all the car park lots because it's 70%, which is okay, fair enough, because there's going to be MRT still within walking distance. So expected TOP probably 2029, but usually they bring it slightly 1 year before. So probably we'll be looking at about 2028 around there if there's no particular delays. The key concern over here will be the AYE, because this side facing is going to be noisy. And when I mean noisy, really is going to be noisy. Later we'll talk a little bit more about how the Momentum Park performance is going to be. But this side, it doesn't mean that it's the nature park facing. This side is facing a small road over here, especially for those that are on the lower floor. They won't be able to see the sea unless you are on the highest field floor. So this side, you are going to still hear some road noise. You are definitely not going to be like some of the units at Momentum Park where they have, I would say, almost complete silence. Because it's the carriage park facing but this side is not, because there's going to be roads and it's a two-way road lah. And over here, I'm not going to be talking about the facilities. I mean, you have full swimming pool, and then even pickleball, which I find is very funny because pickleball is like a recent kind of thing. But we all know that these kind of trends come and go. Tennis court maybe is a little bit longer lasting. It's been ongoing for decades already. But pickleball is I'm not sure how long it's going to be staying, but well, let's not comment. And the part that is facing AYE, they do have acoustic measure. How effective is it going to be is still quite questionable. Unit mix 67 are the two bedders, including the 2 plus study. 37 are the supposedly the largest so-called own stay one. But we also know I think it's not very fair to comment that the 3 bedders are for investment, the 2 bedders are 3 bedders are for own stay, 2 bedders are for investment, because some people do buy it for own stay. Some people do buy it for own stay, some people buy it for investment. So, but I would say maybe more like a larger or normal family size oriented will be the 37%. So large majority I would say still catered towards the rental profile. Next we have the maintenance fees. The smaller units up to the 3 compact will be around $400 before GST. So if you include for the bigger units plus GST, it will be almost about $600 already. Nowadays, I think is getting in a way from bad to worse in terms of maintenance fees because of the nature of inflation. So it is not going to be cheap at all for this. But if you're buying like 3+ million, I don't think $600+ is going to be phasing you that much lah. As for the developer, these are the track records. For those of you who know the price performance for these projects, it's a rather, if you know, you know lah. I shall not comment on this. So I'm not gonna be putting out data on this because I don't want to make this video too long. But if you need all this data and if you really cannot find, then you can kind of find me for it. But I shall not comment further. And then Genu, this over here, which I think is making this this is basically what makes Lyndenwoods that popular lah, because recently it's been all over the news, right? Kudos to the marketing team. And then these are the floor plan. I'm not going to be going too much into the floor plan because like what I always say, I know there are some agents that are focused a lot on floor plan because they say the conventional layout is not so good because it's not so space efficient. Dumbbell is efficient. I personally like dumbbell. I've been loving dumbbell for the longest time because I find I prefer efficiency. I don't really care too much about some people, they like the conventional thing because they say it's a privacy kind of issue, right? But I mean, it's still your own family unless you're like talking about co-living. But that's the thing, just maybe about 3-4 years or maybe even 2-3 years ago, people, they like the conventional layout. They don't really like the floor plan because I hear things like the dumbbell layout. They don't like, I open door, then I see my family. I'm like, okay. And then nowadays is dumbbell layout is the in thing. So who are we to say that now dim dumbbell is very good, very nice, okay, blah blah blah. 3 to 4 years later, it's gonna be a different thing. And it may actually going to be a different thing. So most important thing is you get what you pay for. Is the space efficient? Is it well utilized? And the room size, is it actually that big? I think overall it's still okay. You still have some space at the side, so it's still decent. It's not like the beds are flush against the window, right? So it's still quite decent size, quite good size for the 2 bedders. Same goes for the 3 bedders. I think it's okay. Definitely not the largest, but I think it is fine. Not too much to complain about. This 12.2 obviously is not really a 12.2 because it's not that wide, because you have to factor in the walkway inside also. So therefore, if you look at all these numbers, it's not really a very accurate gauge of the room size, because you're not going to be using this space for sure. You're not going to be putting a bed here. Of course you can put, then you just climb over the bed, then you can still sneak another character, right? But still let's just move on from that. You get the idea. This interesting guest room, I think most people will end up using it as a study. So this is the 3+ guest unit, which is 1292. I think the interesting thing over here is that the units here are huge. In today's term, huge. But of course, if you talk about the olden terms, it's definitely not big. It's that more like a little bit more like decent. More if you talk to the elderly, they will, the house is very small. But if you talk to the younger guys still looking at the new launches, they this one big, 3-bedroom, 1292 is like 4 bedders kind of size. So it is not wrong, because some people may see actually this one is the 4 bedroom. So it really depends on how you see it. But this may actually contribute towards the unique quantum, the price quantum, which may make it not so affordable to the upcoming buyer from you, unless they really like this particular project and your unit. So let's just take a look at the surrounding. This is the area, as you can see, not flooded with supply with like areas like city area or the Newton area. So if we look at just the radius of 1 km, then there are 4 particular condos. Of course, Normanton Park, the second largest, if I'm not wrong, in the whole of Singapore. The first is TAT Treasure at Tampines. Normanton Park is the second largest, but of course not as packed and cramped as Treasure and Tampines lah, because of the nature of the higher rise of the buildings. So these are the competitors. And then if you look at the area, when we extend further up to the Buona Vista area, then we have one of Eden, the Hue and One Off, Blossoms by the Park. This one has already hit resale or rather sub sale for now. I don't think it's CSC yet, but these two are definitely still under construction, and you can see that the prices are more or less stabilizing. Some people say the prices are coming down, crashing. Not wrong, the prices are going down, but if you're talking about crashing, I think it's very unlikely. All these are not exactly a very accurate gauge here, but of course, nobody as an investor would like to see their own investment property going like this. So it's unfortunate. The Hue recently had some promotion. Unfortunately for those people who bought at a high, well, they should have done their homework. But those people who got a good price, I wouldn't say that after the promo price is the best price, but if you got in at one of the lowest, then I mean congratulations to you. You are definitely not the champion in the project. And then basically, I think it's a little bit too early to tell at this time. One of Eden is still kind of generally still newer, newly TOP, because this was only TOP last year. This was TOP back in 2023, and then this is the recent brand new launch. The difference is that this one is a post-harmonization project. So if you compare, right, post-harmonization at this price, so maybe pre-harmonization, I would say maybe it's around this price. So it's actually below the rest. Okay. And then later I'll talk a little bit more about all this movement of this project. So not too much to worry about at this point, because I look at the numbers deeper, then it seems that it is still fine. This area is still generally safe to invest as a whole. I'm not saying Lyndenwoods is like the best project to handle in right now. I think there are better choices in this market. But of course, if you talk about pre-harmonization, then people buying towards the west side. I don't want to mention which project, but the west side, and then pre-harmonization at 2,500 plus PSF. The other then that one is not even the MRT one. The MRT one has hit 2008 2009. Pre-harmonization, that one is I'm not sure how those guys are gonna be exiting, man. That is a whole new level of craziness. But we compare with two other resale projects over here. You can see that these two guys are floating and hanging around 1,600 plus PSF and hanging around this level for about coming 3 to 4 years already. Okay, so Momentum Park has been hanging around probably about 2 years. But after the recent news of Lyndenwoods and also the upcoming changes in the master plan, especially the draft master plan, I think there's going to be a lot of things happening in that area. Later we'll talk a little bit more about that. But Lyndenwoods today launched at an average of 2,450 PSF, which puts it around here. Bloomsbury is just a little bit actually it's very close it's just a little bit higher. But remember again, Bloomsbury is post-harmonization, so this is pre-harmonization. If we compare it supposedly fairly, of course there's no way to compare fair, super fair, but if you compare like this pre and post harmonization, then this will put Lyndenwoods above, which is fair, because some people will say that it's an MRT project, of course, which is very funny, because sometimes I see certain projects they are within 3 to 4 minutes walk or 5 minutes walk, but people say that it's not an MRT project because they want the MRT right smack in front of their face. Then suddenly now I see Lyndenwoods I wouldn't say 5 minutes or maybe I would say maybe about 7 minutes, but 7 minutes people are pricing it like a total MRT in your face kind of project. You get where I'm coming from. So I think it's a little bit crazy and a little bit too overly bullish to look at things over here, especially considering the fact that some people may still feel this place is a little bit raw for pure residential, which is fine. I don't think this is the case, but of course a lot of people still think that way. That's why Bloomsbury didn't really launch that well. But on the other hand, just not that far away, Lyndenwoods today is like almost sold out. So this is like heaven and earth. This one didn't really do well. This one did extremely well. But one is like supposedly MRT. But we have also seen quite a lot of cases previously. Right in front of MRT doesn't always mean that it's the best thing. And sometimes you may launch very well, but who knows, maybe after that your residual units transaction may become like this. So that's why I would say sometimes it's a little bit too early to say. It's not to say that when the particular project sells out or almost sells out in the first few days or even few weeks, it doesn't guarantee the future performance. Just because it's popular now doesn't mean it's going to be popular next time. I've run through some videos very long ago, maybe about 2-3 years ago, on the performance of certain condos when they after finding out they will launch very very well at the initial launch, but then they end up losing money. So if you do have time and you want to go and find out, then please go ahead to the history and then go and find the video, because we won't have time to go and find this. Anyway, let's move back to this. Lyndenwoods will be placed comparatively. If you compare the post-harmonization period, then Lyndenwoods will be here compared to the Bloomsbury. Of course, the rest will be pre-harmonization. So if you look at the gap, it's still quite a big gap, considering that Normanton Park is actually not that far away. And Normanton Park actually has a shuttle bus. So why do we talk about that? Because we are comparing the competitors for Lyndenwoods. This one is a little bit old, so I think by then it's going to be almost 20 years apart. 10, 18, 17 to 20 years apart, depending on when they are going to be built. So Rochester residents, as you can see, previously didn't do well. The funny thing is that you see, sometimes when people complain, the 3-bedroom is not big enough, then this one is very big, when very big, then it becomes not so affordable, which is really the case. 2007, you can buy a lot of things. You can buy landed, you can buy a lot of things. But why would you want to buy a 3-bedroom condo here? So definitely, unfortunately, 13 years, definitely, and unfortunately, 13 years later, this guy, the first mover, actually ended up losing, I would say, maybe about $160,000. But on the other hand, this guy who managed to top this deal made a lot of money, made $700,000+ within these few years. So before you are jumping, maybe you should go and buy Rochester, maybe you should buy something like this. Be careful, maybe you're gonna be the next guy over here. I'm not saying that you confirm will be, but I think chances are pretty high at this point when the market is very heated up. Remember, this is our extreme fear period. This is just past the extreme fear period, which is the circuit breaker period. Okay, for those of you who live long enough to tell the tale for circuit breaker. Well, anyway, back to this. 1,679 square feet. Look at how much space is wasted. You have this one, you have so much planter, so much balcony. Never mind. The bedroom is quite decent. The living room, of course, is quite big also. And then nowadays we don't use this word, we use helper, but last time it's called maid. And then these 3 rooms are like very funny shape because of the design of all this. So last time we got a very very funny design. A lot of people like say the older houses nicer, bigger. Yes, I agree, but you also have to look at how the layout is this. Last time maybe it is the ending to have all this funny layout. It's like, maybe you hip or something, but you can see that, like what I mentioned just now, layout tend to change with time. The preferences for layout change with time. So last time maybe is the very in thing. As you can see, this one can only put 1 bed. This is even worse than the current new launches. If it's even worse than those that can fit in a queen size but flush all the way to the window. I mean, correct me if I'm wrong, but I certainly think that this is actually definitely much worse, because you can't even fit in a queen size bed over here. study, even if you can see out this room, how much can you put in? So I think most people won't bother going to do it. And then you have this funny flap over here, which you can't really put much stuff. Maybe you should add one funny bay window, and that's pretty much it. So you can see that this is probably the reason why it has been going sideways for the longest time, which is unfortunately not ideal for an investor point of view. Now we move on to the comparison of Normanton Park versus One North Eden. So we can see that Normanton Park has been very profitable. 100 plus transaction that is profitable recently was going quite mad. You can see quite a lot, 2025 transactions, and then unprofitable only 3, all of which are just the one bedder over here. So I think over here later we will talk a little bit more about the smaller units just in a short while only. Let's just move on to One North Eden over here. Also almost about comparable profits. But if we look at some people say, hey, the One North Eden is more profitable, which is not exactly the case, because if you look at this, if you look at the annualized in general, it's about 4 to 6% in general. So same goes for this one. It's almost about 4 to 6%, and it can vary quite wildly. So some people is like 10 point something, and then you have this one. Some over here is like maybe 4.2, right? So generally, I would say before we go into the orders, all little small little specifics, because this annualized I feel doesn't really matter that much, but it's just a gauge for us to compare, like how much holding period and is it actually generally profitable. I think is okay, and you look at the profit margins, they are quite similar also. So generally what we're seeing over here is that this area is still okay, decent, quite good for residential investors. But on the other hand, if we look back at Normanton Park, right, those that are not exactly doing well recently, you can see over here, right, for those of you who are wondering, over here, Normanton Park going down, right, most of the culprit are actually the smaller units. So for people they are rushing into Lyndenwoods, this is the reason why we are pointing out this. For those people they are rushing towards Lyndenwoods, especially those that are road facing, you wouldn't want to get in too high, because these guys are having a lot of trouble trying to exit, especially for those that are the AYE facing, because it is obviously not that attractive, and there's quite a lot of competition. And next time when Lyndenwoods is putting up for sale in the resale market or sub-sale market again, people will definitely compare with Normanton Park. So you have got to be careful. You need to know who are your competitors and how much are your competitors generally exiting. Currently, resale market, they are already exiting at this point. Last time they get in 1,007 plus, and today they have difficulty trying to get out of 2,100 plus PSI. Other than this guy who is a legend, for sure. This is a two-bedder. Okay, of course, if you look at their profit margin, some of these are not very attractive, but some are quite decent. So over here, right, ultimately, of course, we need to know that Normanton Park has a lot of supply. It is a mega development, second largest in Singapore. It really matters a lot how you sell it, how you market it, how you negotiate is very important. These two are of the same stack. Can you believe it that this guy is actually 20th floor, this guy is 13th floor? Unfortunately, we cannot show you the full unit number because of PDPA reasons. But look at this, the 20th floor actually making less money than the 13th floor. That's just not the case. I mean, that's just not only the only thing. The other thing that we want to know there is that the 13th floor actually transacted at a higher PSF than the 20th floor. So how do you manage to do it? I think the most important thing is you need to be marketing it at the right time, or rather right way, and then negotiating in the right manner. I think that is very important, especially because a lot of people are trying to rush buy this, but they forget that actually the most important profit making step is actually the exit. So a lot of times I always tell my clients, you just wait. A lot of times, a lot of agents like to tell, hey, the client want to sell, right? a lot of times, if you really know how to read the market, it's no harm trying to wait for maybe half a year, 1 year, because that can turn the tide, that can make a lot of difference. Because even if you get into the next development, who is to say that you rush into the next development, that within that half year, 1 year, right, that one is gonna make like 100, 200k. So sometimes it's not that wise to just keep trying to rush to the next unit. You need to know what you're actually getting into and make sure you are getting the right advice for that, which is very, very, very important. Okay, so over here, gist of it, make sure that you are getting into the smaller units, especially the two bedders at Lyndenwoods at the right price. If you are getting, I think on average, if you are getting 2.4 plus, high 2.4 especially onwards, then and you look at your competitors over here, and these are also pre-harmonization, which is similar to Lyndenwoods, then you got to be really careful, because if you enter at high 2,024 or maybe even mid 24 lah, let's just say, you need to be exiting at 2,700 plus, mid 2,700 plus pre-harmonization price, to be able to make just for 300 PSF. And if you just use the 700 square feet as a gauge, that means you are grossing at 200 plus, slightly over 200k profits, which if you net in, which is not actually that lucrative considering your entry price, because ultimately we are talking about ROI and also your annualized gains. So if you key in the numbers, you know your numbers, you will know that there's a lot of difference. Next, Bloomsbury, if we compare, because we are comparing the latest two projects in the area, right? Although this one, yes, is far away from MRT, this one is not that far away from MRT. Remember, keep in mind, this one is still Queens, nearer towards the Commonwealth, Queenstown area. I'm not saying that, of course, you should go and chiong and buy now, but remember, all these are concerns when you are buying, because all these are your competitors. 2 bedroom premium dumbbell layout versus dumbbell layout. Let's just use it as an example. The room spaces, this one for Lyndenwoods, of course, this is quite big, but this one is not small either. So it is, I would say, generally quite negligible in terms of the room size difference. Still a dumbbell layout. This one, the kitchen part one side some more. This one, the kitchen walk in. I remember there are some people commenting, hey, units then open the door, straight away I see kitchen are not good. And then the funny thing is, today people, all these units are cleared like super hot cakes. So sometimes that's why I say floor plan is very, very, very subjective. When the FOMO effect comes in, people don't care. You don't care too much about quantum, but you remember you need to keep in mind your size, your quantum play, because ultimately that is how much you're gonna be exiting plus your profits. So today the Bloomsbury guys, even though supposedly no MRT project, they are getting about 1.5 plus to 1.6 plus million. This one is getting almost about 1.8 plus million. Is this enough to buy a car or not? I think the answer is very obvious. So why would you need to buy just right in front of the MRT for almost pretty much the same thing, I would say, right? So I will just leave it at that. Next, same goal for the 3 bedroom premium. If we add in, this one has a yard and a WC. So over here, there's also a yard and a WC, and the yard is even smaller over here for Lyndenwoods. WC, I think, is about the same size lah. This one has an aircon latch. This one aircon latch also have, but it's non-strata, it's not counted in because of the post-harmonization period. So over here, you can see that this one is a 980 square feet, and like I said, is a little bit bigger in terms of the unit size. This one transacted about 2.3 plus million. This one transacted about 2.5 plus to 2.6 million. So quantum wise, you can see there's quite some difference over here. I shall not be comparing everything, if not we cannot be finishing, because this is already half an hour in the video. So just move on. The good thing about this is that Greater One North area is recently one of the main focus of the URA draft new master plan. So in fact, after they come out this whole new article, right, the first one they talk about a new neighborhood is already the Dover Medway Greater One North area. So is there a lot of potential in this area? I think it's quite obvious, because this was already floated around since last year in One North area. So there's going to be homes in the business park. Last time it's all business park area. There are more and more mixed use colors in the master plan if you know how to read it, as well as residential, because the government is trying to introduce homes near the offices, near the research labs, so that people are actually staying much closer to where they are working, which is fair enough because this is actually quite a convenient place. Because after all, the funny thing is always I see all these business park areas, right? People say ulu whatever but it is actually very close to Commonwealth and Queenstown, which are like, people are dying. People say, wow, this one very good location, but just a little bit further away people say ulu already. You see, that's the funny thing. And I can guarantee you within the next 10 to 15 years this place is going to be the next booming thing, because that is exactly what happened to Panorama previously. When we talk about, let's just skip a few things. Okay, previously over here, Panorama couldn't sell back in 2013, and in fact the developer Wheelock had to make a loss, had to declare a loss for it. Okay, correct me if I'm wrong, I'm not an accounting guy for at all, I do not claim to be. And then they have this allowance thing because they couldn't sell well at all. From what I know, they only sold 8 units at the start. Maybe okay, I got it, maybe 58 units at the start. And then out of the few hundred units, only 58 was sold. And then over the next few months, nothing got sold except for this one thing over here. So you can see that the cumulative take up maybe was only about 8% for Panorama for a few months. You think they kanchiong or they confirm kanchiong ma? Because at that point there was pretty much nothing, and it was quite a ulu part of Ang Mo Kio, even though it is still Ang Mo Kio. And guess what happened today? We all know that Panorama is one of the most profitable resales in recent years for something that is of a newer age lah, right? And then now what we are seeing is almost something like that happening again. It is a new area supposedly going to be developed, and I shall not go through this article already. So basically, remember, URA is focusing quite a lot of attention in this area, which I think rightfully so, because it is still generally quite a convenient area with a lot of highly paid workers over here. Over here, we can see that Master Plan 2019, I shall make it easier for you. All these are circle areas, places that have changes in the master plan. And this was the amended 2019 master plan. So I don't want to go through one by one, but you can see for yourself. If you want, you can pause the video and then have a look. But back to this most recent draft master plan, you can see that a lot of things has changed, especially over this part of the master plan. Okay, this one got changed to red color, which is a mix of commercial and residential. Usually the first level will be the commercial lah. And then now suddenly this whole flock also become red color. So what are they trying to do? The government is trying to introduce more and more population into this area. Whether all of these are going to be private or public or not doesn't really matter. But if this is going to be public, it will minimally be a plus flat, minimally. So will it be prime? I really don't know yet, but I think it will minimally be a plus flat, which makes it in a way much more valuable, right? I mean, there's a reason why it's considered plus flat, and we all know that these flats in this area are not cheap at all. So in conclusion, I think this is a very, very long video already. We are hitting almost 40 minutes. So in conclusion, I think it's very important to consider the facings, especially those that are facing AYE. In the resale market, they are not easy to sell, especially if you want to sell high price as an investor. So today, if you are buying and you're okay to stay facing the AYE, I think you're fine. You don't have to worry too much about the noise. But if you are buying as an investor, you are very price sensitive, and you want to make sure that you are getting in and you are getting out with a very decent size profit, you may really want to be very careful, especially your unit that you are going to be booking, or rather you book already, is facing the AYE. So smaller units like what I mentioned in Normanton Park, they are not exactly very, very, very popular right now. Maybe things will change in the future, but currently this is exactly the case. So I will caution the same thing for Lyndenwoods. The bigger units I think generally are still fine, so I think it is okay. Pre-harmonization for Lyndenwoods, before you forget and compare it to, oh, Boothberry, wow, because some people they really don't understand this thing. They'll compare, wow, the Boothberry further away, then this one is a 2004, is the same PSF, is a totally different thing. So get this straight. And as a result of this, there is a difference in size and quantum, especially quantum for momentum part and Boothberry compared to the Lyndenwoods. So today, if you get in at 1.8 million, you need to be selling at 2.0, 2.1 in order to be making a profit. And how much are your competitors actually selling currently? Will you be able to hit that price without them catching up? So very important to know your competitors. It's a little bit too early to tell also, given that it is 90+% sold at this point. So anyway, this will be the end of our long video for this. Like I said, super incredible performance for Lyndenwoods. But it remains to be seen how is it going to be. Generally, CapitaLand got this land cheap because they managed to get it. Last time Business Park usually is cheaper lah, and then they somehow managed to convert it, and probably that's why it was launched below the expectation of most people. But then again, it is still not exactly cheap. So you need to make sure, if you are getting in from an investor point of view, you need to be really careful and clear about your exit plans. If this video helps you in a way or another, please help to like, share, and subscribe. And that will be all for today. If you need any help, feel free to DM, and I'll see how I can help. See you guys. Take care. Bye bye.